Welcome to Bitcoin Dorks, your daily source of news and updates on the cryptocurrency market. Today we will be discussing the recent trend of funding in the crypto startup industry. According to a recent report, funding in the industry has hit a new low not seen since late 2020. Let's dive in to understand what this means for the industry and what factors could be contributing to this trend. What is crypto startup funding? Before we discuss the recent trend in crypto startup funding, let's first understand what it means. Crypto startup funding refers to the process of raising capital by new businesses in the cryptocurrency industry. This capital is used to finance operations, development, and growth of the company. This funding can come from various sources such as venture capitalists, angel investors, or through initial coin offerings, ICO. According to a report by CB Insights, funding in the crypto startup industry has hit a new low not seen since late 2020. The report indicates that in the first quarter of 2021, crypto startups raised a total of $2.6 billion, which is a 42% drop compared to the previous quarter. This is also the lowest funding recorded since Q4 of 2020. The decline in funding can be attributed to various factors. One of the main reasons is the recent volatility in the cryptocurrency market. The crypto market experienced a significant drop in value earlier this year, which could have made investors hesitant to invest in new crypto startups. Another factor is the regulatory uncertainty surrounding the crypto industry. Governments around the world are still struggling to create clear regulations for cryptocurrencies, which can make it difficult for new startups to operate in a stable and predictable environment. The rise of non-fungible tokens, NFTs, could also be a contributing factor. NFTs have gained a lot of attention in recent months and have become a popular way for artists and creators to sell their digital assets. This shift in focus towards NFTs could have led to a decline in funding for other crypto startups. The decline in funding for crypto startups could have a significant impact on the industry. With less funding, it could become more difficult for new startups to enter the market and for existing startups to grow and develop their products. This could also slow down innovation in the industry and could make it harder for the industry to achieve mainstream adoption. However, this trend could also be a positive development in the long run. With less funding going towards less promising projects, it could lead to a more focused and sustainable industry. The startups that do receive funding could be the ones with the most potential, which could lead to more successful and impactful projects. One of the most significant factors that could be contributing to the decline in funding for crypto startups is market volatility. The crypto market has always been known for its volatility, with prices fluctuating rapidly based on various factors such as news, adoption, and regulations. Earlier this year, the crypto market experienced a significant drop in value, with Bitcoin dropping from an all-time high of nearly $65,000 to below $30,000 in just a matter of weeks. This drop in value could have made investors hesitant to invest in new crypto startups, especially since many existing companies in the industry were also affected by the market downturn. Another factor that could be contributing to the decline in funding is regulatory uncertainty. Governments around the world are still struggling to create clear regulations for cryptocurrencies, which can make it difficult for new startups to operate in a stable and predictable environment. Some countries have outright banned cryptocurrencies, while others have created regulations that are either too restrictive or not comprehensive enough. This lack of clarity can make it challenging for investors to determine the risks associated with investing in crypto startups, which could be leading to a decline in funding. Another possible factor that could be contributing to the decline in funding for crypto startups is the rise of non-fungible tokens, NFTs. NFTs have gained a lot of attention in recent months, with artists, musicians, and creators using them as a way to sell their digital assets. This decline in funding could also slow down innovation in the industry, which could make it harder for the industry to achieve mainstream adoption. However, in the long term, this trend could lead to a more focused and sustainable industry. The startups that do receive funding could be the ones with the most potential, which could lead to more successful and impactful projects. This could also lead to a more robust and stable industry, which could make it easier for investors to determine which projects are worth investing in. In conclusion, the recent trend of declining funding in the crypto startup industry can be attributed to various factors such as market volatility, regulatory uncertainty, and the rise of NFTs. While this trend could have a negative impact on the industry in the short term, it could also lead to a more sustainable and focused industry in the long term. The industry will need to continue to adapt and evolve to overcome these challenges and attract more funding. However, with the increasing mainstream adoption of cryptocurrencies and the growing interest in blockchain technology, there is still a lot of potential for growth and innovation in the industry. Hopefully, you found this information useful and informative. Remember, when it comes to investing in Bitcoin, it's important to do your research and stay up to date with the latest trends and developments. By staying informed and making wise investment decisions, you can maximize your potential profits and secure your financial future. So, until next time, keep learning, keep growing, and keep exploring the exciting